Perspective, guys. Viewer request, Tango calling. Brought this to my attention from StockTwits. StockTwits. TAP, Molson Coors Brewing Company. And guys, man, this company has been, it's on the New York Stock Exchange, non-cyclicals, industry brewers. Man, I love these old crazy charts, man. 76 monthly candle chart, crazy base on the monthly candle chart, explode, pull up, pull back to breakout line, and yeah, kind of messy, but kept going up and up. And this is the crazy exponential growth, unsustainable growth, and you know these high mountains, what goes up must come down, guys. If not 100%, a strong good 70%. And look, Molson has been in downtrend for a while, guys. While everybody's looking at the SPX right now, looking at everything imploding, well, on the monthly candle chart, you have price action below the 12-month moving average back in December 2016, guys. Remember that rule? If you have a monthly close below the 12-month moving average, you should not be there. Not that you should short it, but you should not be in the stock. Because after that, 12-month average going to start flattening out. And when it starts declining, after that, when the 12-month moving average is happening, then after that, you start looking for a short entry. And that is identified by a horizontal breakdown line, monthly defined support. And once you get that close below it of a declining 12-month moving average, then you know that is a strong trend, guys. Just like that trend helped you going up. Look at that price action above. Just beautiful here. Tightening formation. Less and less volatile. A little bit here equal. Less volatile. And then bam. Coil. Price action drying up. Volatility drying up. Price action was remaining above the 12-month moving average. And then all you were waiting for was that candle close above. After that, off you go, guys. For years. 1 year. Was that 1 year, 2 years? All the way up here. Price action below. Big warning signs. And then after that, you would not necessarily short it. You'd have to wait until the 12-month average was starting to go downwards. And then you have that whole weight of evidence. How's the market doing? The industry, the sector. Stage 3, try to go down. After that, got back in. Continuation stage 2. And after that, kept going up. Volatile. And then top pattern broke down. And remember, look at that 12-month moving average, man. Every time you have a breakdown, pull back up, doesn't quite make it. All right, I get discouraged. Okay, forget about the stock. Pull back up. Breakdown. Lower lows. These are all. Whoa. It's not what I want to do. Lower lows, downtrend. But now, okay, what's happening here? It's getting close to that 12-month moving average, guys. It's moving sideways, not going as fast downwards. It tried to go back up. Sellers came back in. Again, 1, 2, 3 months in a row. Trying to go back down. Look at that, how well that monthly defined support is respected, guys. Here you had to close at 61.65. Here you had to close at 61.50. And right now, all that wick. Was that the wick of despair? The final blowout? I'd rather have like tweezer tops. But you're back in the range right now. And the more it stays in this range, the more you have a chance of this being a bottom, guys. Because the 12-month average is going to start going downwards. And after that, woo, maybe. And after that, when you break out above here, it's not, here's too early. You still have to wait. You want that 12-month moving average angling upwards. Can I cheat that? I can't move it. Control Z. What? Control Z. What? Why is it doing that? Okay, remove. Try that again. And then eventually, bam, if you're out here. So that base could take a while, guys. There's no hit and then go back up. Even if you go to 2008, the index is, yeah, it was violent at the bottom and went back up. But it still takes some time there to really get a 12-month moving average going back upwards, guys. So that's the line in the sand, 68 until you have a close above 68.12, no touch. 68.15, no touch. If you have a close below 61.33, then the scenario is okay, it's undoing all my okay, there we go. If it closes below that, then bounce, the 12-month average is going to keep going downwards. So don't guess it. This could just be a consolidation, a sideways move before it continues breaking down, guys. All right, let's zoom in on the weekly. Let's get some details. How that thing is shaping up. Weight of evidence. Where's the support? Where's the resistance? Oh, look at that, man. Red overlay. Declining 30-week MA. Price action below 30-week MA. Underperforming SPX. Had some brief period where you were above the 30-week moving average. Gray zone. Potential stage 3. Potential stage 1. Stage 4. Stage 1. No. Down. After that, kept going down and down and down. Look at that. Ooh. Okay. So the price action is above the 30-week average, very close to it right here. You have the Ichimoku cloud defined resistance. So again, we had that monthly defined breakout line. If you want to play it up, but right now 30-week average is still going downwards, guys. So this is getting better. You're starting to go upwards. You're still not outperforming the SPX, so you don't kind of want to be there. And the 30-week average is still declining. So there's still some pressure. And we saw on the 12-month average, you're still declining. So you're going to need more price action here. I don't know if it could bounce here and then out. It needs some time. You need time to digest all this overhead. All these buyers are now sellers. All this overhead resistance. It just takes time, guys. There's no recipe. You see in the bases when you're super happy and you just discover a stock and it's breaking out. Well, you haven't been a bag holder for that stock, right? You're coming here, you're checking at the charts, and you're so super happy. Oh, I'm in. It's awesome. Well, look how long it took before you got this crazy move, man. A long time people were in the stock. It wasn't moving much, ranging. They were abandoning, moving on to other stocks. They had bought higher, and then they're... So all this, same thing here. Goes down, resets, all these, the overhead supply, people have to get out, takes time. And we see time through these obstacles that we have to go through. We have to go through the monthly, we want that 12-month moving average going upwards. We want that monthly defined breakout line. We want to be close above that. The weekly, close above that. You want the Mansfield relative strength. You want that to turn green. So there's still a few more clues that we need to really say that this is a stage 2 breakout imminent. We're barely in stage 3, barely getting into stage 3 territory, guys. We're really going to have to see how this plays out in the next following weeks, if it continues back down or not. So very embryonic for me. I'm not on the daily chart. Maybe on the daily chart looks better. But the trend is my friend, one of the criterias of the Stan Weinstein. And as long as I don't overpass at least these levels here, the 70 level and the right here and the 68 level. If I don't have close above that, it's too dangerous, guys. A slippery knife. It could easily slip, especially if the SPX has a monthly close below 2630 there, that line in the sand on the monthly candle chart. That insane SPX, where are ya? Where are you? Right here. That line in the sand right here. And dangerous territory, guys. The cliff is so close by. We'll have to see if that bounces. Remember, price action, if it stays below 12 average, it's going to start going downwards. So until all that clears up, no for stage 2s. It's good to keep an eye on out because you always want to be in the leaders when they start rolling out, especially TAP that has been cycling, has been going down way before the other stocks are going down. It's a leader of that stage 4 decline. And it could also be a leader for that stage 2 breakout, guys. So this could be a signal that something could be brewing if this is able to maintain and if this could be really a stage 1 and a bottom. It could be good omen for the rest of the market, guys. But right now, we'll just have to wait. Thanks, guys. Subscribe.